To me,
But
SpaceX is the equivalent of Dogecoin. Mark Cuban and Elon Musk own most of the coins. And then there's this cult of people that own it and think it's worth something, but it's not worth anything. And if Elon sold one Doge would go to zero. Like somebody said to me, I tweeted about it. He says, well, you just don't understand. This is going to 10x. I'm like, okay, let's do some math. The US GDP today is 31 trillion. Let's say it grows at 4%, which it's not going to do. It's going to grow at 2%. But let's say it grows at 4%. In 10 years, it would be 40 trillion. So you're saying that SpaceX, which is going to 10x, is going to be half of US GDP.
Sometimes the loudest warning isn't a market crash. It's when one of Wall Street's most respected investors looks at the hottest company on earth and compares it to Dogecoin. Just weeks after the biggest IPO in history, the story around SpaceX is already beginning to change. The stock exploded out of the gate as investors rushed to buy into Elon Musk's latest empire, pushing the company's valuation into territory usually reserved for entire national industries. But as the excitement fades and reality begins to set in, shares have already surrendered a significant portion of their early gains. For Mark Yusko, that isn't a temporary setback. He believes it's the first crack in a much bigger narrative. In his interview, Yusko doesn't simply argue that SpaceX is overpriced. He claims the entire structure of the IPO was designed to manufacture scarcity, inflate demand, and eventually provide liquidity for early insiders. He explains why comparing SpaceX to buying Apple or Microsoft in their early days is mathematically impossible, why the current valuation makes little economic sense, and why investors chasing another Elon Musk success story could be ignoring some uncomfortable realities. So, is SpaceX the next great technology company, or the biggest hype machine we've seen since the meme stock era? Let's hear exactly what Mark Yusko has to say. If you enjoy deep dive market analysis like this, don't forget to like the video, subscribe to the channel. Leave your thoughts in the comments, and turn on post notifications so you never miss our future uploads.
so you are a big critic of the recent SpaceX IPO, and you consider Elon Musk a great storyteller. Can you explain why you are so critical?
It's kind of what Elon has done. He did it with Tesla. He floated a small amount, got a hype around it, got a lot of people to jump on the cult, and then he engineered a big short squeeze. Remember, he did the shorts thing, did a big short squeeze. Price went up 10 times. The price has been dead flat for 4.5 years. Revenues are down. Free cash flow is negative. Company is basically on the verge of a real problem because of BYD, but he did it with Tesla. He makes Tesla look like a practice run with what he did with SpaceX. He only floated 4%. So 4% of the shares are outstanding. So 96% are owned, 46% by him, and then 50% by people like us and others. And we're all locked up. So then he convinces the indices to include it, even though it has no profits. So it would be excluded from the indices unless they made an exception, which he convinced them, except for the S&P, to do. And you're supposed to wait a certain number of time before it can get seasoned. They waived all that. So he's basically stuffing this overpriced security into mom and pop's retirement account so he and his VC buddies can cash out. To me, that's theft, really. I mean, call it what it is. And they're just going to keep feeding the ducks. So it's certainly possible that this thing squeezes even to more crazy valuations than we're seeing today. But at the end of the day, this is a $20 billion revenue company that loses $5 billion, that will likely never really make money. And when the AI, and this, he talks about AI data centers in space, that's not going to happen. It's technologically not possible. And all this stuff that he does to spin tales to get people excited is really just getting people to be his exit liquidity. And so, to me, SpaceX is the equivalent of Dogecoin. Mark Cuban and Elon Musk own most of the coins. And then there's this cult of people that own it and think it's worth something. But it's not worth anything. And if Elon sold one Doge would go to zero. Now, SpaceX isn't quite that bad because there is a company. And their satellite business is actually good business. The AI business, we'll see. It's cash flow negative right now, and I think it will be for a long time, but we'll see. And there are a lot of promises made, but I think ultimately, as the lockup expires and the people try to sell, I think that goes down a lot, like a lot.
So what do you say to people that have been buying into it, thinking that this is like buying Microsoft or Apple stocks in the early days?
It's impossible. It's mathematically impossible. When you bought Microsoft or Apple in the early days, you were buying a little tiny market cap company that was going to become necessary infrastructure, right? This is not that. It's starting at $2 trillion valuation, not at 10 million or 20 million or 50 million or 100 million or even $1 billion. You're starting at 2 trillion. It's impossible. Like somebody said to me, I tweeted about it. He says, well, you just don't understand. This is going to 10x. I'm like, okay, let's do some math together. The US GDP today is 31 trillion. Let's say it grows at 4%, which it's not going to do. It's going to grow at 2%, but let's say it grows at 4%. In 10 years, it would be 40 trillion. So you're saying that SpaceX, which is going to 10x, is going to be half of US GDP. One company with no profits is going to be half of US GDP. It's not going to happen. It's a mathematical impossibility.
Whether you agree with Yusko's conclusions or not, his central argument is difficult to ignore. In his view, investors aren't buying into an early-stage growth story, they're buying into a company that already carries one of the largest valuations in financial history. His criticism isn't aimed at SpaceX engineering achievements, which he openly acknowledges, but at what he believes is a disconnect between the company's fundamentals and the expectations currently being priced into the stock. If those expectations begin to unravel as insider lockups expire and financial performance comes under greater scrutiny, Yusko believes today's optimism could look very different in hindsight, but while he's skeptical of what he sees happening in the equity markets, Yusko remains remarkably optimistic about Bitcoin. In fact, one of the biggest headlines this year, the controversy surrounding Michael Saylor's recent Bitcoin sales, has, in his opinion, been completely misunderstood. Rather than signaling weakness, he argues those transactions reveal something much more important about Strategy's evolving business model and why investors may finally be starting to understand the company's long-term vision.
I think the market's finally understanding what Strategy's strategy is, which is to create this capital structure, this capital stack with the digital asset, Bitcoin, the digital equity on top of that, MSTR, and then layers of digital credit above that, from preferred stock to convertible bonds to ultimately, if he wants to, he could do straight debt. But, he's been on record saying you don't sell your Bitcoin. Well, right. If you own a small number of Bitcoin, you should not sell your Bitcoin. You should just keep accumulating Bitcoin. But his strategy is to build this behemoth company that over time accumulates Bitcoin, but uses on occasion some of the liquidity to fund payments to dividends and preferred shareholders. So, when he did the first sale maybe 6-7 weeks ago of 32 Bitcoin, right? Insignificant amount. And the market freaked. I mean, we went from 64 down to 58 again, and people were predicting the end of the world. And he's like, guys, I told you this was going to happen. I'm just showing you that it can happen. I think this time, the first reaction was a pretty, decent drop, 3-4%. But then people went, okay, he told us he was going to do it. He did it. Net, he's been an accumulator of Bitcoin this year. Right? He issued some debt, some preferreds, bought some Bitcoin. Now he's paying some interest, but net, he acquired net amount of Bitcoin, which is the whole strategy. So long answer to say, I think people are finally figuring out it's okay that over time, there will be transactions on his balance sheet. It's not just buy it, tuck it in a box, and do nothing with it. He's now creating a set of instruments that people like myself can invest in and earn very nice yields relative to traditional fixed income.
The contrast between these two conversations couldn't be more striking. On one side, Yusko sees a company whose valuation has been propelled by scarcity, excitement, and an extraordinary public narrative. On the other, he sees Strategy steadily building an entirely new financial architecture around Bitcoin One designed not around hype, but around capital formation, long-term accumulation, and increasingly sophisticated financial instruments. His broader message is one investors hear far too rarely during bull markets: stories can move prices. But mathematics eventually catches up. Whether it's projecting trillion-dollar valuations decades into the future or dismissing carefully planned Bitcoin transactions as panic selling, markets often react emotionally long before they react rationally. Separating narrative from economic reality is one of the hardest and most valuable skills an investor can develop. That doesn't mean every prediction will prove correct. Markets have a habit of humbling even the smartest analysts, but Yusko's framework encourages investors to ask better questions. Is a company's valuation supported by realistic future cash flows? Is temporary volatility masking a much larger long-term strategy? And are headlines causing investors to miss what is actually happening beneath the surface? As always, we'd love to hear your perspective. Do you agree with Mark Yusko that SpaceX is dramatically overvalued, or do you believe the market is correctly pricing its future potential? And what do you make of Michael Saylor's approach to Strategy's Bitcoin treasury? Let us know in the comments below. If you enjoyed this analysis, please leave a like, subscribe to the channel, share this video with someone interested in markets and Bitcoin, and turn on post notifications so you never miss our latest content. Thanks so much for watching, and we'll see you in the next video.